Hello, hello, hello. Happy New Year, everyone. Thank you for tuning in. Still an official holiday here in the USA. Hope everyone had a wonderful vacation time, which is wrapping up way too quickly. Seems like it was just yesterday that we were getting a break, and now we're back at it already. Good afternoon, Patrick. Happy New Year. Good. Hey, Connor. CD. George. Coco says bullish New Year. And Nisa, thank you. Happy New Year. Hope everything is wonderful overseas as well, and have people hiding in the background. Again, might be a little lighter live stream, but the market's officially open in just under the futures, officially open in just under a couple hours. We should take a quick look at the bigger picture. We also have to prepare for this week. I find it's better not to leave it till the last minute. I wish everyone a wonderful, healthy, and prosperous new year, especially prosperous in your trading and investing. So I hope I can be part of helping you learn and grow as a trader and investor. And just thank you for being here. All right. By the way, if you're checking us out for the first or second time and you have not subscribed yet, please do consider it, because we will be doing a lot of wonderful things this year. So let's take a quick look. I mean, there's not much going on today because the futures aren't even open. But we actually, Tesla reported their delivery numbers, which was missed from consensus and street estimates. I know they were trading lower in Frankfurt. So we'll also peek in at that maybe. But what's on the economic agenda for this week? We have tomorrow global manufacturing PMI. Remember, this is the more mid-sized companies. That's the only thing. Still forecast to be in contraction. That's 15 minutes after the official market open tomorrow, not the evening market open tonight. But since the stock's open at 8:30 Central, 8:45. Hey, Daniel, thank you for tuning in. Wednesday. We have ISM manufacturing PMI. The bigger boy is on Wednesday. Still forecast to be in contraction. Remember, anything below 50 is contraction. And we also have the FOMC minutes from the last FOMC meeting back in December. So that could be potentially market moving. You also have the JOLTS job openings, which more people are paying attention to. So, but you got data starting to flow out Wednesday. Thursday, we have initial and continuing jobless claims. We have the services and composite PMIs from the S&P. So that's the smaller one. What else do we have? We have, of course, our crude numbers again on Thursday instead of Wednesday. And, it's been so long. It's been so peaceful. But we're back to Fed speakies. We got Bullard. I don't know if there's another one. Sometimes they don't capture everything. The first one I'm aware of is Thursday. Thursday at lunchtime, we got Bullard chiming in. So it's not long till we get to hear more Fed speak. Remember, the next rate hike is February 1st, Friday. It's non-farm payroll Friday. So that could be potentially big, because that's going to really set the tone. This is non-farm payrolls. What day is? Hold on. I forgot. So the 1st of February would be a Wednesday, yeah. So this is the last non-farm payroll before the next Fed rate hike decision. There's other numbers that are coming out, but this is the last payroll before then. What else do we have? We have after payroll, which is going to be the biggie, coming out 1 hour before the open. We have ISM non-manufacturing PMI, which is still in expansion and still forecast in expansion. That's coming out 30 minutes after the open on Friday. And then we got Cook, Bostic, Barkin, and Bostic again. So Friday is the super busy day this week. So things are backloaded. Backloaded. Oops, I didn't want that. Good. Give me back my map. There we go. Give me back my thing. There we go. Who else is here? Evening, Charles. The last 3 days have been great. I don't miss the economic calendar at all. Well, I find it handy to review, but I didn't miss the markets being closed at all either. CPI on the 12th also. Yes, on the 12th. Looking way ahead. Charles looking way ahead is CPI on Thursday the 12th. That's the following week. So that's going to be the big number the following week. I think that's the biggest thing all week in that was a CPI. So that's where we sit. Should we just wrap it up now? Is that good enough to get everybody started? Market map, in case you forgot, on Friday, some oil rally. Things sort of mixed. Very choppy day with that collar. The big collar getting rolled to March. So we closed that out. The week ended up with energy being the strongest, followed by financials. And, everything else was pretty mixed. And look at the month. Look at that month. For things like technology down 8%, consumer cyclical down 10%. Oof. So we're going to have to see if the market comes out humming along. For Feb 1st, I'd mentioned before. So under a month away at this point. 67 or close to 68% for that 25 basis points. So we'll keep an eye to see, especially with Fed speaks and the unemployment numbers this Friday, if that rises or falls. Fear and greed still in fear. Current market valuation still, on the higher side of fairly valued. And the yield curve model still strongly overvalued. We do have some earnings, very minor this week. Nothing I'm really paying attention to. But just in case you own any of these stocks, there are some earnings. Probably the biggest one I'm going to key in on is there's a couple. Walgreens Boots, Alliance, and Constellation Brands. Maybe ConAgra's not a bad one to look at. But everything coming out, that would be Thursday. Before Thursday, there's just not much. So Thursday before the open, there are a couple things to pay attention to. All right. Tesla at 420 pre-split. Next stop 69. Okay, Elon. So let's take a quick look at the bigger picture. This is the weekly. Keep in mind, weekly cycles are getting to the bottom, not yet officially turning up. They are getting to the bottom. So could things still sell off? Yeah. What I want to look at is so far we've been forming nice on the bigger macro even the monthly. You see here, lower lows, lower highs. So what would it really take to change things going into, the January? If it rallied, it would be taking out the high from the week of December 12th. That high was 41.80. That would change the pattern from lower lows and lower highs to possibly now a higher low and a higher high. So that's a key area I will be watching for. Major line in the sand is still this 43.70 area on a closing basis. That then, if we did get, especially a weekly close above that, probabilities could shift to where we retest some of this higher area from last January. But until that really shifts, there's not much going on. But the first warning sign we could getting a shift in pattern is if we take out this 41.80. Until then, If we do break down, my key level is the 75% harmonic 3671 with the 200 to retest that. So those are my two big lines in the sand that I'm going into, through the beginning to middle of January watching. On a rally, it would have to be this 4180. On a decline, 3671 area with the 200. Shorter term, we've got cycles near the top. It pretty much flatlined, as we covered before our little break. It pretty much flatlined these last couple weeks. Now, on a shorter term basis, I'm going to be watching to see if we get above this 39.35 area. That was this support becoming major resistance. It could not exceed since it closed below it on the 15th of December. So that's my short-term level. Anything other than that, you're still in consolidation. Now, the breakdown level I'm watching is this 38.07 on a closing basis, and on a trade-through basis, intraday would be 37.88. So the closing basis is 38.70. Till we get the close below there or a close back above 39.35, we're still in a huge consolidation after the breakdown from the higher consolidation that was established mid-November through mid-December. So those are the two bigger things I am watching for. And remember, I already went over, if we start that breakdown pattern, the 36.71, we start getting above this 39.35. My first target before I'm getting anywhere close to that 41.80 would be to see how we react at that 200. That 200 will be a pretty strong reaction area. Okay, which is 41.10. I mean, 4,010, not 41.10. So that sort of maps it out where it sits for the S&P. The NASDAQ, which has been a lot weaker, and no, we don't have a double bottom because it's extra hitch in here. The NASDAQ, what starts shifting? Well, the first thing I'm watching is the highs again from the week of December 12th. 12,340 area, 12,339. But that slams in also to the 50-week. I cannot, the major line in the sand is all the way back up. It's 14,630. So we're a long way off from there. The next major harmonic areas is 13,202. So those are the key things, but I'm really focused if we do get on any rally, those highs, from a high perspective, it's the highs from the week of December 12th. From a closing perspective, it's going to be right around 12,000. Right now, this is critical, though. We are back within a fairly close to those lows in October. I mean, we're not that far off. If we do get anything to roll over again, and my key levels is 10,700, 10,000 about 718, 10,720 area. We break down there, you can see a very fast retest of the lows from October 13th, 10,484. So that's my line in the sand. Now, on the bullish side, can't get overly bullish until we get about above 11,350 area. 11,350 on a closing basis. That gets me minorly bullish. More significantly bullish would be above 11,500. Because that would be down the major breakdown zone that we closed below on Thursday the 15th. And you see where the S&P moved sideways, the NASDAQ was overall lower during that same period. So that's what we are keeping an eye on here. I'm more interested to see if this does a retest of these lows, this 10,720 area before, and if that holds, then I could see a pretty decent rally being put in. I'm wondering if that will get a retest this week. The Dow, we do still technically, it's getting extended to the right side. If you want to use the right side negation stuff, it's nearly never triggered, nearly over. I'm still going to use these targets. I wouldn't trade it as a double. I don't mind using the double targets because the second target lines up with what would be virtually the end of the clear path. So I'm just going to keep an eye on this. The interesting thing, though, is if we break down below Monday, December 19th's lows, let's see here. What day was that? Yep, Monday, December 19th lows. Then I am really watching for a potential breakdown to about 31,900 and then possibly 31,107. So the Dow gets easier because we get a close, especially starting. We have the right here, this 33,662. We start getting a close above there. This is the first thing I'll turn to for a bullish play, followed by the S&P. Those are the first two things I'm watching for the bullish play. The Dow, the key major area. Let's see. We've already shifted the pattern in the Dow. Remember, it was doing the lower highs, lower lows, and we eked out a higher high than the high in August before this pullback into the end of the holidays. So that is pretty interesting. Also, statistic-wise, the probabilities favor. The probabilities with the Dow favor a return to 35,812 to the high area. So the Dow does technically favor a retest of last January's high area. So we have those, again, not guarantees, but we have those probabilities. It would need to do a lot of technical damage. We'd need to get a close below about 31,100 before the Dow really starts shifting into more significant bearish mode. So that is very interesting with the Dow. The Russell, we're getting this downwards to, going to keep still an eye with this double bottom pattern on the Russell. My major key area I'm watching on the Russell is about 1815 on the upside. And on a closing basis, again, on a closing basis, I want to see another close back below about 1745. Then I'm going to be targeting this low range. So that's my breakdown on the closing basis. Let's see. The DAX ripped today. There you go. Tesla missing deliveries. Yeah, I talked about briefly that 405 versus 420. What else? 2023 is the year of the rabbit. Quick market changes coming. Whew, I don't know. I mean, I think we'll still have a lot of volatility this year. And I think this is the worst priced in recession. Yeah, everybody's saying it's a recession, but in terms of the market pricing it in, horribly priced in, especially with earnings. So, you know, I still think the market's way discounting too much. Mike, have I done testing of harmonic retracements between implied volatility moves up and down For an underlying, no, I have not, Connor. I have not. That would be an interesting study. The DAX, again, the DAX, nice closing up move today. Still in the breakout or breakdown range. Still in the horizontal channel. The DAX needs, for me, a close below 14,150 on a closing basis, or on a breakout basis needs a move above 14,228. For upside, downside, my key closing level is 13,940. We get a close below that, then I'll watch for a retest of the 200. Notes. The bigger picture in the notes, watching to see where we sit. So far, we've had a massive move down in the notes. I'm watching this 111.09 on a closing basis. Why we had a close below that? We could then retest the low areas from October into November, which, if it doesn't break down from there, could set up a massive double bottom. So that's the key level. Now, if we hold, you can see here between the 50 and the 62, we've already dipped into there, but we hold in there and turn up. There's nothing I can really get overexcited until we get back above 115.10. Then we're into a weekly clear path move, and we could see some substantially lower rates and higher price action. This is nowhere near a double yet. I'm just curious for my own sake. Now, the targets, what's interesting is if it does come back, make a double bottom, and then triggers it, the target, whether you do a breakout into the clear path move or the doubles, they're nearly identical. So we do have potential setups to the upside, but nothing yet triggered. But very key to me, and we still technically have a gap left behind from the 9th to the 10th of December, a gap down here. But I'm still watching in the short term for a little weaker note and higher rates in the 10-year. Hey, Waka Waka. Waka thinks Tesla will go up, not down. Okay. So there you go. There's Waka's prediction for Tesla. Dollar index. We're right sitting here. This is very interesting with the dollar index because it's still below its 200. Could not get any rally on. So we start breaking below the lows in mid-December. I'm watching 102 to roughly 101.60 to 102 as my first target area. The only thing that gets me bullish short term in the dollar index is a close above 104.52. You can see here the dollar. Still, the major line in the sand on a closing basis is 98.75. And right below that's the 200 week. Hey, Sterling, thank you for being here. So, what else do we have? Oh, we don't need to look at the VIX right now. Crude, as I talked about, this is really nice because I'm eyeing still a potential breakout play below above 81.20, and my target area is 83.50 to about 84. The only thing that makes me short-term bearish is if we trigger the double, which would need a close below 76.79. So crude in the bigger macro, even on a continued rally, look, that 84 area just takes us to the other side of the weekly rotation zone. And we still have the double top in play with the final target being 61.82. However, I'm more focused on 65.50 on the next substantial rollover play. Gold? Gold, is this going to be the year for a gold bull? I'm keeping an eye. We are pinned to the top. I'm watching for a rollover play in gold coming up shortly. But from that macro perspective, we were trending down with lower highs and lower lows. We've now traded above the August highs, so we've at least made a higher high. I'm going to be watching this pullback when we do get it. I'm going to be watching the pullback. What's interesting is the 200 week is back between the 50 and the 62.5. Could we easily pull back to 1730? Yeah. And then rotate back up and still then form a major weekly higher low? Yes, we could. I am, though, watching in the short term. Even if we do break out the upside, I'm watching for another rollover play. So anything else is more aggressive targets the upside, and then watching for the potentially bigger pullback there. Where else do we sit? One of the trades I think for the year will be, again, the US dollar, Japanese yen, triggered in the head and shoulders. We could easily see us eventually return to 115. So I'm looking for setups like this, back into the rotation zone, rotating back down. Is this a potential double bottom? Yes. But this could easily be invalidated within the next couple days. My next minor target is 129.58 area. And then I'm going to 127.11, then 124.50. But this is going to be on, especially on rallies and rollover plays. That's sort of a go-to trade. Keeping an eye with the euro at this potential double top. But it is not triggered. Needs a close below 105.76. Although we break above 107, I'm watching for a pretty quick potential return to about 107.80 area. The pound doesn't have any great setups. The only thing that makes me a little more bullish short term in the pound is if we get a close above about 120.20. I'm still watching for the pound to return to the 50-day exponential moving average. Bitcoin, still asleep. Tesla, which Waka Waka says he expects higher prices in. Going to be interesting. Their earnings are Wednesday, December 25th. I would not be surprised after this delivery gets out of the way to see a potential rally from this very oversold condition. And then that would set up for key shorts. So not that I'm expecting it, but the full blow, if we get an oversized rally, it would be to about 160 to 165. A normal bounce rally would take us to about 140 to 145. Let's see, where do we sit? Didn't we get some news over the weekend that the Fed is looking to reverse? I didn't see that. I did not see them say anything about that. If somebody else has that, you gotta send me the info because I didn't see anything about that. there's some note put out by, I forget if it was Goldman Sachs or something, that they think they'll reverse, but nothing that's stated by the Fed. Happy New Year, Donald. Thank you for being here. Green on crude, you got the same levels as me, starting to think I'm not crazy? Well, hey, if you got the same levels, you're definitely not crazy. These classes are paying off. Nice looking potential double bottom on GNRC. Let's take a look. GNRC. Did I get that right? On the daily. This, that's, oh, it took that off. Okay. Little forced on the sloppiness of that double. I treat this as more of a breakout play to potentially about 111.86 area. You could use that first target. I'd probably just treat it as more of a breakout play that 111.86 and return to that 50. Got a lot of price action to work through there. So could be interesting on a little pop. Just be careful with cycles at the top on that daily. Charles wants copper. Copper is still in a long-term bullish pattern. Massive double bottom triggered back at the beginning of November, and just we're basing at that 50 week, just below that, and just below the 200 day. So copper for me is still in a long-term bullish play. Even on pullbacks, even on a pullback to 370 is still a long-term bullish play. I'm watching for when this does get a sustained pop, and a close back above the 200 could be very interesting in the short term. You see rejected once, twice, 3, 4 rejections of the 200 with no close above it. So that's in the short term what I'm watching for on copper. If we did pull back, it would just be, my target would be to about 370. But keeping a very close eye because of this longer term. In the short term, I'm keeping a close eye on the next breakout. In the longer term, for just complete this bullish pattern to the upside. So my play on copper is on any pullbacks with a bullish bias. Might as well just peek in at silver. Silver, I'm also watching for a potential pullback play with gold. It's pegged at the top, but as long as silver holds about 22 to 22.20, it's setting up for another bullish buy. If it does break out short term, 25.26 is my short term target. But I'm watching for a pullback here and then a rally back up in silver. Yeah, the sector overview is going to make a comeback. I had to take a minor break. I will start posting the sector overviews. They'll probably be we'll get the first week of January under the trading, and then we'll do a new sector overview. So 166 is Tesla and for your max. Well, that's 165 is my max. So yeah, we're roughly Yeah, I think it was Goldman Sachs that said something. I'd have to go back through my notes. Uh, what else do we have? I I'm scared to say it, but most of my biases are green for the week, minus the notes and perhaps the dollar. Most of my biases are looking for potentially upward moves this week. I'm watching for key short-term breakout plays. So that's what I'm seeing overall. But yeah, if the dollar breaks down, then that's supportive of a continuing rally in the financials in the stock market overall. Why are you scared to say? And remember, a lot of years you have a pretty strong January effect. And also remember, one of the most volatile trading days is tomorrow. Forgot to mention that again. Tomorrow is one of the most volatile trading days of the whole year historically. Keep that in mind too. That's why I generally like some of the little dust to settle and then start getting a cleaner perspective. But the beginning of January has a decent upward bias, especially the first week. So keep that in mind for short-term plays. Coco says tomorrow will be up over 2%. Well, it could. I'm watching for some price action overnight tonight once it does open. On the very short term with tonight, we've had this little stair step down lower, but the first key level I'm watching for is this 3880 and then 3900 are my two little targets for overnight on a breakout play, followed by about 3920. And what would shift it for everybody going tomorrow night and into tomorrow for your short term? Well, we especially start getting above about 39.30. Next target 39.84. And on a short term basis, a close about 40.33 shifts the probabilities. So there's the roadmap for the higher plays going into the overnight. Can't get overly bearish unless we were to start breaking down below 38.07. So that's the key area. So going into tomorrow, if we get follow through, especially during the day session, 39.34 is going to be very key. And if we close above that tomorrow, we could be easily off to the races. And my next major target would be this 40.33, somewhere around there to target on a closing basis. All right. So where does everybody let's hear some year end. I hate those. What's your low print for the S&P? Let's grab the S&P. What's your low print and the close first, where do you think it'll trade down to this year? And then where do you think it will close 2023? Just curious. Just curious. Prediction time. I want to hear some thoughts. All right, Charles, first out of the gate. Low print 2,900, close 3,200. Hey, you're not far from me. That's pretty good. Happy New Year, Mike. Can you check? We'll take a look at. Nothing's changed with it. We'll take a quick look at it. Put in some predictions while I check on BNGO. you're still hoping for a miracle. You're still hoping for a miracle in this. I mean, you've completed the probabilities back below the 87.5. You don't have. Look, your key upside, if it did break out, would be about $1.76 at this point. So you're, unless something triggers some kind of weird squeeze play in this, you're not getting that. Or they announce some breakthrough that's completely not on the radar screen. You're hoping for a miracle. All right, now back to the S&P. All right, Mike's 2602 and 20. So close is 2602 and the low is 2440. Coco's is at Coco. You need a low and a close, unless it's going to close at 3,000 and that's the low. Feel 3,000 is a big magnet. But Rich is between 2,500 to 3,000. CD SPX 1569. All right, CDs at 1569. Who's going to be the official record keeper? Connor's 2791. George's 3,200 low, then high of 4,600. Wow. So you're going to see have to print there pretty long. Then that would be a pretty substantial rally. I guess the Fed would be pivoting then. We can't be worse than professionals from last year on CNBC. The 6 they interviewed were between 5,400 and 4,400 SPX with a median of 4,785 by the end of 2022. Yeah, they missed by over 1,000. Connor, low of 2174, close 2791. Very specific. I nominate George as the recorder. Mr. Hamza, 4,500. I assume that's the, all right, your low is 3,200 and the close of 4,500. So you're very similar to George, who is 3,200 and 4,600. George is holding everyone's to account. Holding everyone to account. All right, so I don't need to make a prediction then. I don't need to make a prediction. My low range is between 28.28 to 25.04. If I have to narrow it down, hold on. If I have to narrow it down even more, wait, let's see. No, sorry, my low rate, mine going with 28. Oh boy. I gotta. Oops. Back to bingo. Oops. Hold on. All right, I'm going 2,500. I'm going 2,500. Actually, I'll be surprised. Realistically, I'm focusing on 31.62. But if we do break below that, if you want my dire prediction, it's this 25.04, 25.05 level, and the closing level back to about 33.15. There you go. There you go. And I'm predicting a major earthquake in California around a full moon coming up in the next couple months. Sterling's low 29.55, year end 3,600. Donald is that's just a close. 33.53. This is so. I mean, I hate these games. People like them. I hate them. If my realistic one is this 33.15 low area. My insane bear hat one is 25.04. So that'll be fun. I hope the epicenter is where the Kardashians are. We're done. We're done for in Cali. Oh, so you back out, pack your bags now. Mike's predicting an earthquake in California. Bear better than beer. I always say that. Beer better than what? Why wouldn't it be beer is better than bear mode? Bear is better than beer though. 31.11 is that on a closing basis or the low? Oh, we got a lot of people doing the prediction show. All right, another. So that's pretty fascinating. I think we'll just stick with the S&P. That's a good one to keep track of right there. All right. One other prediction. You don't have to give me a price, although I'll welcome. Oh no, give me a price. Gold. I just want. I don't care. I just want the high price. I want the high price for gold for 2023, and then we'll call it. We can throw out a couple others sometime during this week. All right, but gold, I want your high price for gold. High price for gold. Beer not healthy. Bear market is healthy. Well, I think a lot of people would disagree with you with the bear market's healthy. All right. The sterling's giving a little more clarification. All right, let's just get gold out of the way real quick. You want my gold? 25.46 high price. 25.46 is my prediction for gold. There you go. I'm going all in on gold. Still so brand new to this, Mike. We'll start predicting. So you don't have to. It's sort of a fun game. Charles, all right, we got 2100. Charles, little more conservative. You're doing a retest of the highs from 20. Okay. Had to check the daily. Charles is going with 2100. Anybody else? Come on. I know there's we got to have some people with at least some gold predictions. Connor's Tesla prediction is $6. All right, you can put in Tesla too. Put in gold and Tesla. If we rip, though, it's to moon perhaps. Well, I need a prediction. Mike's 2182. I'm peeking at my Tesla. I'm going to give my Tesla prediction of 28 bucks. 28 bucks. Tesla, 28 bucks. We'll put a line right around there. So there's all right, we got gold. Gold I have going way up. Tesla I have going way down. Who else? I see we did their gold with the harmonics. I'll go with you're going with 23.19. You don't care about gold? Well, maybe another day well, how can't you care about gold? You care about Bitcoin and not gold? We'll do Bitcoin another day this week. Your Bitcoin target is 3,000. All right. Wowee, Tesla 28. It'll be a Tesla bloodbath. A Tesla bloodbath. All right, not seeing any other. Well, if you want to put them in this week, come prepared. Not in the pre-market, but post-market, I'm open for any other predictions. They're valid for the entire week. Elon will be broke. Oh, well. With that, all right, I'll let everybody get back to George's end phase is 100. Apple prediction? Oh, boy. 40 close? Oh, see, I'm predicting Apple will hit. Oh, I'm targeting $100 for Apple. I have no idea on the close. It just depends on how much the market stabilizes. Predict which sector? Consumer staples. George says Apple at 50. Look, my full target from the Apple topping pattern is still 82. So if I had to go really bearish, I would go 81. 81. There's my super bear. If Apple is very bearish, I'm going 81 as a low, not as a close, as a low. Mr. Hamza says Apple 90. Have a good one, CD. All right, Connor's at 75. With that, let's just that sector answer tells us what we need to know: sell tech and buy cigarettes. Exactly. And what's the play? What's the play? Altira. There's your play. We'll leave it at that, everyone. Have a fantastic rest of your evening. I will be back tomorrow, 8 a.m. Central. We'll take a look at the overnight price action. Remember, markets open in just about an hour. So we will talk to everyone and see how we're doing with the January effect kicking off this week. Remember, Bob should be on tomorrow afternoon after the close with us. I will see everyone back then. Thank you for tuning in. Bye for now.